Shot session. Shot session.
What are other benefits of having life insurance?
Besides your family having,
Well, that should be the best.
yeah, that's the number one. Right. So in the event that you pass away, your family will have what they need when they need it, without having to see people do the GoFundMe. Yeah, that could pay for the funeral, but again, what about the kid's future?
Right.
If I'm gone, what is my wife to do? You know what I'm saying? If I'm not covered.
Right.
But because I'm covered, I'm surprised I'm not on first 48, because my wife probably would have killed me alone. I don't want to go. But it took me out. But if I go, they set for life. Okay. Just based on what I know and how I set it up.
So you have your own life insurance policy?
I got plenty.
Would it be too much of me to ask just a simple
no.
of how yours would go to yours is structured as opposed to somebody that's
no
smoking and all this other,
No, great question. So for me, I'm not I don't smoke nicotine, and I'll smoke occasionally a cigar or two, right?
Right.
But when they run my medical background, the insurance company, they have access to the Medical Information Bureau. When they run that, they're going to see my history and say, oh, he don't smoke. Oh, based off his height and his weight and his age, he's considered to be a great risk to invest this life insurance into. When you have somebody that smokes, think about it. Somebody got asthma, diabetes, and they smoke. They're like, this person is not a good risk for us to say, okay, if you die, we're going to just pay out $300,000. No. That's how the insurance company's looking at it. They're like, okay, we have to give this big amount of money out. Because no matter how many premiums you pay, you'll never reach the same amount of money unless you overfund or do extra stuff. You'll never reach it. The typical premium for somebody that smokes, diabetes, let's say in their 40s, is probably like $85, $90. So think about it. If you cover for $100,000, do you really think you're going to spend $100,000 over the course of the time that you got left?
Yeah.
No. So that's why they're looking at it that way.
Right.
But yeah, that's another.
So is it you get more? I'm not sure how to word it, but I'm trying to put it. Is it more of a percentage that a healthier person? I don't even know if that's the right term.
I think I know where you're going. Are you saying based upon the family dynamic, is there a certain amount that the people may need?
Yeah.
And coverage?
Yeah.
Yeah, so that's where, again, the person has to have a deep, the broker or the agent has to do a deep dive into the person, right?
Okay.
So, let's say us. You got 5 kids, I know you, right? I would say, okay, I would ask you, what's your salary, how much the house costs? Because why? If something happened to you, wife gotta have what? At least 1 year of your salary, and she gotta have enough money to pay off this house. Because we want her to keep the house.
Right.
That's number one. Most of the time people say get 5 times your salary. Yeah and no, but again, we talk about budget. If it's not in your budget, let's start with something that is in the budget.
Right.
Because guess what? Once you get approved, you can always increase that coverage.
Okay.
Most people don't tell you that. They just tell you, oh, I need $100,000 in coverage. Okay, cool. I approve you for $100,000. You may never do anything else, but if you accumulate more children, more wealth, that $100,000 ain't gonna go far.
You can actually go in and ask for it.
You can say, hey, I've gotten 2 kids, and my wife and I, we just bought a house. Okay, the house is $300,000, and you got 2 extra kids, and you only got $100,000. Cool. Let me bump this up to $500,000. Let's see if that fits your budget. That fits your budget based upon your age.
Right.
You don't have to go through the reapproval process.
Because you already got
approved.
And there's a reason that they just don't tell them, or it's just it's not their business to even inform.
No, it's just that some agents, and I'll break down the difference between an agent and a broker. Agents really focus more if like an Allstate agent, State Farm, Geico, and I'm not throwing shade at them. For the sponsors, we're not throwing shade. But their bread and butter is property and casualty. So a lot of times they don't really have too many of those conversations with people about life insurance. An agent is someone that talks to you about that specific carrier and their products that they offer. A broker is someone that can be contracted with many different carriers to give you different options. So it's my obligation. Remember, I have a fiduciary duty to be ethical.
I like that word. Say it again.
Fiduciary duty.
Fiduciary. Do you know what that means?
No.
Come on here, Aaron.
That means I am legally supposed to make sure that I have your best interest at hand.
Okay.
That's what that means.
Okay.
And then at the same time, it's our job to follow up with you to give you these points. If a lot of times I tell my clients up front and I'll say, look, I'm gonna follow up with you in a year. Let's schedule something so we can see if anything has changed. If things have changed, let's make change. If nothing's changed, ain't nothing to do with it. If you don't want to.
Right.
So
Alright, man. Am I missing anything? Any questions? Anything before we get up out of here?
Question.
What you got, sir? Kind sir?
I was hearing the life insurance tip that some people were using it. They could get money for them to make, they're living now while they're living. Instead of, as we always think, oh, that's only when you pass away.
Right.
But I heard some people were using their life insurance as like a way to do some business or get some money while they're living and stuff. I don't know how that goes though.
Yeah.
forgive my Google Duo.
Okay.
This
It's a nice little tune in
Nah,
there.
it's my mom and dad calling to see the kids. You know how that goes. But yes, so to that point, the living benefit is associated with both a whole life insurance policy or an index universal life policy. I like the index universal life policy more because it gives flexibility in premium. That's the only thing I did not mention.
Okay.
The flexibility in premium for the IUL is, let's say you can afford $120 a month for the first 2-3 years. Then what happens? Lose a job, can't work. Now you're looking at all the things you can't afford. Some of these insurance companies, if not all of them, have made it available where there's called a minimum no lapse premium. It's actually in the pamphlet I gave you.
Okay.
With Transamerica, shout out to them.
Training.
Minimum no lapse premium, meaning that's the minimum that you can pay so that you can keep this policy in force.
Oh, okay.
That's one of the biggest reasons why I like IULs. Number two, the interest on that is going to be more than what a whole life is. Whole life is traditionally a fixed interest rate, so it may grow at like 3 or 4% max. The IUL, the one that you'll see in there, the maximum that they have in there that it can grow up to is actually 7.25%. So you got to think about it. That's a whole extra 3% that your money can grow, but it's really based upon the performance of the index. So with that example, if you're paying $115, and mind you, a portion of that is going to the cash value, even if you never overfund it. You can say in the next 5 years, okay, out of that 115, let's do some math so we keep it simple. Right. 115 times 12, that's 1380 times 5. You spent $6,900. Out of that $6,900, let's assume that you got 37 of that in cash value. So right. So and that's in 5 years. So that means what? You can borrow up to $3,700 if you need it. If you want to do something around the house. They don't tell you, it's not like a 401k where you get penalized for it. No, sir.
Okay,
That's a
yeah.
good thing.
Yeah, no, you don't get penalized for it. And there's no obligations on, oh, you have to do this or you have to go through hardship. Oh, that's your, what's that commercial, JG Gentworth? That's your money.
And I need it now.
Yeah, that's just how it is because you're paying the premium and your money is just building. That's
And
it.
then you pull out.
Hey, this thing is flashing.
That's your money, and you need it now. Yeah, that's just how it is because you're paying the premium and your money is just building. That's
And
it.
then you can pull out every now and again.
Flashing.
Oh, okay. All right, we gonna get up out of here. No Guidance Radio. You already know.
We gone.
DESHON, let them know where they can catch you at. Pull up your social media, all that good stuff.
Listen,
Catch
y'all
you
can
up.
go to Google right now, type in my first and last name, DESHONDIXON.com. You can also go on Facebook and type in Dixon Agency Group. And you can also find me on TikTok at DESHON Dixon.
It died?
That's cool.
Yeah.
As long as we got it on the mic.
It was just like really right now. I seen that flashing and then it shut off. It was in the last 2 minutes. I think you got the last answer in.
Okay, cool.
Thank y'all for tuning in. We about to get up out of here. Before we do that, thank you, DESHON. I appreciate you for giving us all that knowledge. And make sure y'all that got more questions than we asked, make sure you go check out DESHONDIXON.com. Let them know we sent you. It's a shot session.
It's a shot session.